So before we dive deep into the market, I think I actually promised you guys I'm going to be giving you guys the whole details concerning uh directional bias of what. Let me make it like this. I don't want to directional bias of what a certain chart. So I think the topic is based on if I'm not mistaken, I promise you guys I'm going to be giving you topic based on it. So how to frame your directional bias using the higher time frame, right? So let me jot it down for you guys. So how to what frame your directional bias in using the higher time frame, the higher time frame, right? So that is the actual topic for today. How to frame your directional bias using what the higher time frame. So now, first of all, before we go dive deep, we need to know the direction, right? Direction, direction. Uh, First of all, if I'm not mistaken, so direction is simply referred to as the overall trend of movement of a market, either upward bullish, downward bearish, or sideways range. That's in other words we call it neutral. Let me jot it down for you guys so you can see it. So direction refers to the what? Overall trend, right? Or movement of a what market, either bullish, bullish, sorry, bullish, bearish, or what? Range, which is called neutral. We can call it stroke neutral. As price giving us a what? A range. Direction refers to what? The overall trend or movement of the market, either bullish, bearish, range, right? Either bullish, bearish, or range. First of all, how can we identify a bullish direction? A bullish direction is when price keep what? Breaking what? Old highs, rejecting below lows, breaking what? Above highs, something like this. Uh, Rejecting below lows, breaking above highs, right? Rejecting below lows, breaking above what? Highs. That is a sign of what? An uptrend. These are lows. Price is what? Rejecting below what? All these old lows. Respecting what? The bullish trend, right? Rejecting below lows, breaking above high. These are break of structures. You all know break of structures. Price breaking structures, right? Breaking what? Structures. Rejecting below lows, breaking above highs, rejecting below lows, breaking what? Above highs. Price breaking highs, rejecting what? Below lows. These are what? These are the signs of a bullish market. The rejection here, the rejection here, but the break, the break, the break, the break. Price travel from here to here, travel here, came, traveled, reject from here, traveled, and what? Break what? The previous what? Old high. You can see it in the trend. Reject, break, coming back, expand. Right? Hope you understand. The same thing on what? A bearish state. Let's make it bearish so you can see it. Let's invert the scale. You can see it. Rejecting below highs, breaking what? Below lows. Rejecting below highs, breaking below lows. This is a sign of what? A bearish what? Trend. Hope you understand it. This is a sign of what? A bearish trend. This is a sign of a bearish trend. Price rejecting below highs, breaking below lows. On a bullish market, price rejecting below lows, breaking above highs. Right? Okay, let's jot it down. Sorry. On a bullish market, on a bullish market, price rejecting above highs, right? Sorry, rejecting above lows, right? And what? Breaking above highs. Why? On what? On a bearish scenario, bearish market, price rejecting below highs, breaking below lows, right? So that is on a bullish market, price rejecting above lows, breaking, sorry, rejecting below lows. This is below, so below lows, breaking above highs on a bullish market. While on a bearish market scenario, price rejecting what? Below highs, breaking below lows. Hope you understand it. So that is the whole thing concerning directional bias. If you don't get confused, you get used to it soon. So now, what are the inquiries that drives price? That is what drives price. Let's see, what drives what make price become bullish is because the market reacting from a key level, bullish PDRs increase the higher chance of price worth buying. Right? Price left an unfilled order, came back, filling the order and what continue what expanding to the high. So now look at this trade here. Let's give an example of this one here. We have this current trade trade we have before diving what deep. This is an example of what price has been doing all day. Can I say all day? You can see it, or all months. This is a monthly time frame. So with the monthly time frame, you can track what's going to happen in for the whole month, the next 3 months. This is the monthly time frame, and the monthly time frame is bullish, right? So first of all, what are we looking out for before entering into any what any trade or any setup? You need to look out for something something that requires you buying, let's say buying whatever pair. It's either Ethereum, Bitcoin, any currency, whatever. So what are you looking for? We are looking for the directional bias, which is the most important one. The directional bias, right? Let me give you all everything what I or let me give you everything I do whenever I wake up in the market. So whenever I wake up in the market, once I get into the chart, what I look for is what the directional bias, right? The most important one. Secondly is what key level. Thirdly is what CRT. Then the last one is what time. I go with time always. So I look at for what directional bias, key level, CRT, time, and which is what we are absolutely going to be playing out here. So first of all, if you could check the whole thing here, the direction of this certain uh, pair is what bullish using the monthly time frame. So we are done with what directional bias, right? We are absolutely done with directional bias because we are bullish. Price rejecting what below lows. These are lows, right? These are lows. Price rejecting what below lows, breaking what above highs. Look at it clearly. We are bullish, right? On the monthly time frame. So we are rejecting below lows, breaking above highs. So now we are done with what about the directional bias. Key level, right? Key level. You know what I mean, key level. Most of you that watch part of my I think the last two is it the last second, third or fourth video on each channel, I mostly discuss on key level. Old high, old low, fair value gaps, order block, breaker block, right? So we have this fair value gap here, which is now what our main key level. There must be a reason for you what buying, right? We have what a fair value gap. Fair what? Fair value gap. Jot it down. Fair value gap. FVG. Right? This is the fair value gap we are what looking at for, which is now our what key level. Third is what CRT. Now if you could check, we have this what accumulation candle. We have the manipulation candle. Look at it. The manipulation candle, right? And look at the high of what the accumulation candle, right? We have the accumulation candle, the what manipulation candle, and we are now waiting for what the expansion candle. So it's either you're trying to trade the second candle or what the third candle. Hope you get it. It's either you're trying to trade the second candle or you're trading the third candle. CRT low, CRT high, accumulation, manipulation, and we are now expecting a what distribution, right? We're expecting price taking out this what high as our target. Hope you understand. Accumulation, manipulation, distribution. So all these can offer the accumulation stage. So we have the manipulation what stage, and we are now waiting for what the next candle to what expand to the high. You can use daily time frame, you can use weekly time frame, you can use monthly time frame. Any time frame you are free on using it. If you want to catch a lot of trend, if you use the monthly time frame, at least if you go through the 4 hour, you notice that we have a long time to what? Keep what? Buying. So in such scenario, you don't need to waste your time. Look at it, the buyer has already started. You can see it. The expansion, price has been reacting. You can see it. Old low sweep, CRT, price forming CRT as well. Sweep completed. Key level, fair value gap, sweep. We are now reaching to the high. So price retracing into all these key level are areas where you need to go looking for what? Buys. You just need to be patient. Patient in a way that you just need to be patient. This is patient. So price giving us a sign of what bullish period. So if you notice, the whole week, let me say last month has been what? Bearish. Price has been respecting all the whole bearish period. So now price failed to respect what? This fair value gap. We have another block. Price failed to respect it. So now we are now bullish. Taking out what? Rejecting below lows, breaking above highs, right? Rejecting below lows. This is an old low. Price rejects on the low and break what? Above. Which what? Gives you more momentum for you to what? Take a buy in what? This certain trade. So we have a long-term buy. We have a long-term buy on what? Ethereum. A long-term buy. This pie alone is okay for you. We will keep buying, keep buying, keep buying, keep buying, keep buying, keep buying, rejecting below lows, breaking above highs, rejecting below lows, breaking above highs, till we complete what? The whole matter, which is now our what? Draw on liquidity. Our draw on liquidity must what? Be completed. Rejecting what? Below lows, breaking what? Above highs. So you can see everything I wrote is what? Completed. Rejecting what? Below lows, breaking above highs. So we'll leave time for now. I won't explain time for you guys. We'll leave a wait time. Let's just explain this because this is what you asked for. Directional bias. How can I catch my directional bias using the higher time frame? So if you could catch the buy here, or you are waiting for a retracement, looking for a perfect time to buy, then you wait. CRT form, you what? Chook in your head. Now look at, let me break down this one here. Look at it. Price came back into this key there, which is the fair value gap. If you notice, if you could look at it very well, this fair value gap is a bit large, and we have a breaker block. So we have two key level, right? Okay, let me make this thing dim so you can quickly see clearly. So we have what? Two key level. This is a breaker block. We can use only the top. You can use the body, not the wick. We use the body as well. So use the what? The body as a what? Illustration. We have a breaker block here and price reacted from the breaker block. Okay, now we have this sweep closing inside the range. You look for what? Model 1, which is your order block for what? Entry. So now we have this sweep closing inside the range, which tells us that yes, definitely this what? Breaker block is what's going to hold. We never break below with a body, but we close inside the range with a wick. So we move down to the 15 minutes time frame for what? Entry. You can see how price has been reacting on this order. We have this sweep. Let me amend it a little bit. Look at it. After the sweep, market structure shifts. This is what? Your order block. You can see it. Stop loss below, targets can be anywhere. So from here you can catch your trade. Hope you understand. You can catch your trade as usual. You can take your entry from here after the retest, which is around here. Yes. Your retest was around here. Stop loss below, right? This is your stop loss, and what you keep riding your trade. At least this is a long-term win. You keep riding your trade. If you want to target the 50% of the monthly CRT, is fine. You can target it. You can target the monthly what? CRT. So That is how you can at least expand your stop loss if you wish, not to be wicked, because sometimes spread affect price. Spread affect your trade. So if you have a very good broker, it's fine. But if you have a bad broker, then you need to change your broker. So you can expand your trade as you wish using the smaller time frame, or you wait for what better opportunity, right? So that is how it really works. Directional bias, how to frame your long-term directional bias. Hope you understand. So do your best to watch this video. Before that, let's go back and see what we said. We say something about what directional bias, key level, CRT, time, and we are done with what we did. Our directional bias is what? Bullish, right? Our directional bias is what? Bullish. Key level, fair value gap. This is our CRT. 1, 2, 3, right? One, this is our accumulation candle, manipulation candle, and we are now expanding what to the high, giving us a sign of rejection. Sign, look at the rejection. This rejection alone has at least said everything. It's bullish. We are bullish. We are bullish. We are bullish. The monthly time frame is bullish. You can stay here and what? Frame yourself. You can move to the lower time frame and frame yourself. If it's daily time frame, fine. You can frame yourself using the lower time frame. So we are bullish. Hope you understand. Alright, so do your best to watch this video, and don't forget to subscribe for more perfect content that is going to help out. So, and again, if you are looking for a certain trade you want to take, you can use this opportunity to frame yourself with Ethereum and take a long-term win with it. Thank you guys.